Broadcast is now starting. All attendees are in listen-only mode.
All right. Well, good morning and good afternoon and good evening. It seems like we've got people from all over the place here. Arizona uses Mountain Standard Time, so it's only 6 o'clock in the evening here. Welcome to the Arizona Chapters 2024 annual meeting, as it says. And we'll just wait a couple more minutes here to see if we can get everybody else logged on okay. So just sit tight for about 2 more minutes.
Steve, while we're being silent here, I am not with Manifest Investing. I'm with Better Investing.
Okay.
He hangs out with us too.
I hang out with Manifest Investing a lot, and I'll do a lot of work for Mark, but my identifier is Better Investing. I'm a director with the Mid-Michigan chapter.
Okay. Well, we'll make that distinction. Thank you for that information. And we've got a few more attendees, so another minute, we'll start the meeting. Welcome to all you earlier birds. And see. All right. Well, let's go ahead and start our meeting. It's about 3 minutes after 6 our time. Welcome everyone to the Arizona Chapters 2024 annual meeting. And we're going to have a real good evening discussion, a good discussion during our meeting on what works with successful investing by Mark Robinson, who is from Better Investing, and Ken Kavula, who is representing Better Investing. And I should say Mark Robinson is Manifest Investing, if I didn't say that right. Ken Kavula with Better Investing. A lot of investing going on. Hopefully we'll find out how to make that successful during their presentation. My name is Steve Clauder. I'm the president of the Arizona chapter. And also we have Robin Hamilton, who's our vice president. Both of us are directors, of course, of Better Investing here, the chapter in Arizona. Before I go on, let me just remind you all of a couple of things on the control panel in the upper right-hand corner of your screen. You can use the handouts to get handouts, the 2 downloadable handouts for the meeting tonight. And so make sure you do that. Also, we are going to allow you to raise your hand. You can raise your hand and get some more immediate attention, or use the question box and spell out your question. Type it in, and we'll answer that when we get a chance. So either way, we'd like your feedback, and we welcome your attendance tonight. All right. So we'll continue on with the disclaimer. Information is for educational purposes. Not intended to recommend or sell any stocks. This is a standard kind of presentation disclaimer that you often see. Most important thing is do your own research, and do not interpret anything we say tonight as a recommendation to buy or sell any stocks. Make sure you use your own research. All right. So here we are tonight. Here's our mission tonight. Provide a program for sound information and education that helps you to be successful lifetime investors. Before I continue, I'd like to thank the San Francisco chapter for their help tonight. They probably don't even know this, but I am recognizing them. I attended their annual meeting last Saturday. They did such a great job. I took their PowerPoint and made it our own, but I wanted to thank them for the inspiration and the kind of means to get this PowerPoint together, and I hope you all enjoy it. We'd like to recognize Better Investing as our nonprofit founded in 1951. So we continue the legacy and traditions of Better Investing tonight. Okay, so our agenda is going to be a little bit of better investing here in Arizona, especially. We'll have our presentation on what works with successful investing. We'll continue with our annual meeting, which basically is going to be pretty simple: voting for directors and also voting on our volunteers as well. And we'd like to open up an invitation to any of you to join us in the chapter. We'd love to have some more volunteers and new directors. We're all getting older, we're getting wiser, and we'd like to meet some more friends to join us in this journey. Okay, so besides that, we'll have the summary, and we're going to be pretty specific on how can we help clubs and individual investors do better and invest and run their clubs and understand better investing and their tools. And like it says, this is something we think about every day. So if you have questions, if you want to have a club visit or just communicate with us, we're available. All right. All right, now. So, it's time for a door prize. Wow, that snuck up on us. We have two ladies, Robin Hamilton, our vice president, and another volunteer, Diane Schaefer, and we'd like to turn it over to you two ladies for our first door prize.
Perfect. First of all, I would like to thank all of these people: Better Investing, iClub Central, Little Abner Steakhouse, which one is my favorite steakhouses in Tucson, and Manifest Investing for donating all of these. We do appreciate it. So the first prize is going to be one of the manuals that Better Investing puts out. There are numerous ones of them. I will email you a certificate and you get your choice. And Diane has the hat with the names. Diane, you want to come on and draw?
I've pulled a name, Nona Kusik, C-U-S-S-I-K. S-I-C-K, I'm sorry. Nona, C-U-S-I-C-K. Nona Kusik.
Okay.
Very good.
And the second one, now we narrowed down people who live in Southern Arizona area for this one. So the second Little Abner's gift certificate for 2 steak dinners goes to Diane?
Carol Varosu.
Okay.
Carol?
Okay.
Okay,
And
now Carol, this is Robin Hamilton. That is all of these will be an email, but that one is hard copy. I have it in my hands, so I will need to get it to you somehow, either mail or something. So don't let me forget.
So it's dinner for 2.
Dinner for 2. That's it.
And thank you very much, Robin. And that's really a nice prize too. Little Abner's, I hear, is quite a place. All right, let's move on. So, getting back to a summary that the Arizona chapter, We serve both clubs and individual members throughout Arizona. Don't ever hesitate to get in contact with us, email, phone, whatever. We are all unpaid volunteers, and we all have this passion for assisting and educating local clubs and individual investors. And that's one thing that maybe some of you also have. One way to express that passion is to join the club and volunteer. All right. In regards to the Arizona chapter, if you have opened up the website, the Better Investing website, and go to the Arizona chapter, this is the link and the page you will see that has all sorts of local events, contacts, model clubs, visit a club, investment club support, and news articles and volunteering. So take a look at that. We do meet as a board on the second Thursday of the month at 5:45, and it is virtual. Actually, that time, I think, should be 7 o'clock. Am I correct? Say yes.
Yeah.
Yes. All right. So
This is
we have a
Carol.
minor typo.
Just a quick note for folks. If you want to listen to this meeting again, you'll find the link for the recording under news and articles.
Aha. There it is down there. I'll put my cursor right there. Okay. If you'd like a club visit, just let us know. We've been told that every club we've gone to seems to really get something out of this. We try and tailor the club visit to something that the club wants, okay, or needs some information about. And we don't have to be there for your whole meeting. We can do a 10-minute presentation and see where that leads, and then let you continue on with your meeting. So please keep that in mind. Now on to our presentation tonight on successful investing. As you can see, Mark Robertson is here from Manifest Investing, and he's been involved with Manifest Investing for a number of years. And as you can see, he's very renowned in the world of investing, NPR, CNBC, ABC, all this stuff. And as well as he's worked with Smart Money, Barron's, Money Magazine, Motley Fool, just to name a few. So Mark really does manifest investing, no matter where it goes. Now on to Ken Kavula. Let me introduce him. If you are involved in Better Investing and you have looked at any of their webinars, I'm sure you have stumbled across Ken Kavula, otherwise known as Mr. Straight Up and Parallel. He has just ingrained his message to me, and I follow his advice, and I really appreciate his insights. So look forward to his presentation, and with Ken as well as Mark. And go ahead, guys, take it away.
Well, thank you very much, Steve. Mark here. I'm the one on the left in the truck down there, and Ken is the one on the right. And I did take some liberties with the title. I saw this picture a couple of days ago, and that's near Sedona, I'm pretty sure. And I just find that stunning. And so I thought we would spend a few minutes talking about making investing stunning. And Ken, I thought that you would enjoy this because you don't shovel sunshine.
I shovel a lot of other stuff at home, I'll tell you. Okay. We both live in Michigan, folks, and we get sunshine regularly about 8 weeks a year. So we're enjoying part of that 8 weeks right now. I happen to be up in northern Michigan, and it's a gorgeous, gorgeous place. If you ever get a chance to travel to the north and we see real trees and real lakes and all kinds of stuff going on, it's absolutely gorgeous.
Good stuff. All right, let's go ahead and get underway. We already kind of covered the disclaimer. Just real quickly, what we intend to do here for the next few minutes together is go over some time-honored lessons. We're talking about nearly 8 decades of witnessing successful investing, And we're going to take a look at some of the details, some of the ways that happens, and then we're going to basically launch into a look at some really cool portfolios from the Arizona audience. And if we have any extra time, we can stick around and talk about anything you guys want to. Ken and I do a series of presentations as two guys talking stocks, and you can watch for that also. All right, good to go, Ken?
I'm good to go, Mark. Let's talk about Nicholson's gifts. He left us with this grand experiment that he called an investment club. The first club actually began around the 40s sometimes, but he said he would help those gentlemen put that club together if they were going to follow some rules. And the first rule was to invest regularly. That seems like a pretty simple rule, but it's a very difficult one for a lot of folks to follow, especially in this helter-skelter world of television talking heads, which encourage us to buy, sell, buy, sell, buy, sell. I'm sure that's not what he meant. I'm sure he meant to be true investors on a regular basis, whether that means monthly or every other month or every 6 months. He meant invest on a schedule and put your money in when the market's doing good things and when the market's not doing such good things.
Second point is to buy high quality growth stocks. We'll talk about how we look for those. We already heard it once, up, straight, and parallel. But the real strength of this community, this organization, I think, is in bringing people together literally around the table, whether it's virtual or face-to-face, to share ideas and explore and learn together. And especially in days like this, the market's been kind of rough the last few days. And our community quite simply behaves differently. We'll go into that in a little bit more detail.
Mr. Nicholson was quite a sophisticated investor, and when he said buy high-quality growth stocks, he didn't mean that that's what you had to buy 100%. He wrote many, many different times that those kind of stocks, those good, solid, up, straight, and parallel performers needed to occupy 75% or more of your portfolio. But as you became an experienced investor, he didn't have any problems with you looking at different types of investment, being a little bit more adventuresome, looking at what Mark and I call non-core stocks. And I think it's important to realize that the caveat Nicholson put on all of those kind of statements that he wrote was, do this when you know what you're doing. And he didn't put any time limits on when that actually happened. I still only keep about 8 or 10% of my portfolio in the non-up, straight, and parallel category, which says to my club members and to people that I work with that I'm still not really certain when it comes to outside of the box thinking and other types of investing.
Yeah, and likewise, I basically stick to 10 to 20% in the playful portfolio, you might call it. But for the most part, core stocks, up, straight, and parallel, absolutely. Nicholson also encouraged us to be prudent, shop patiently and diligently, look for truly better companies, and be patient enough to wait for them to go on sale. Sometimes you have to wait years for that to happen with some companies, but do that, diversify appropriately, and that's just kind of the general framework that has been followed since the 1940s without exception, without changing.
If you listen to Mark and I regularly, that word patient, along with a couple of other words, is one of our words that come through quite frequently, with patience at the top of the list. To be a good long-term investor, you have to have some patience. And we'll keep telling you that over and over again until you finally believe us or leave us to try something that we don't think works quite as well.
Well, Ken, you've been on the road, you've been up by the lake. Have you even turned the TV on or checked your portfolio for days?
Well, the only thing I've been looking at, Mark, is the Slack thing that you and I and 4 or 5 other folks keep going. And you alerted me to the fact that the CNBC report was coming in, markets in turmoil again. And whenever I see that, I kind of have a reverse reaction to it. To me, it doesn't mean that they're in turmoil. In fact, to me, it a lot of times mean it's time to seriously look at how much cash I have and where can I put it to work.
Yeah.
I think you have some data about that, don't you, Mark?
Yeah, this is our public service moment for the night. If you have any friends, family members, investment club partners that are itching to panic a little bit, here's a little fun fact for you. This is basically saying anytime that image has showed up on CNBC in the past, if you actually sat down and then invested in something, a year later, the average return on that investment would be 40%. And it's been right 100%. And
It's not.
go ahead, Ken.
It's not too often that we find an indicator that's true 100% of the time. And with our luck, Mark, the next time they put this up, it won't be true. But something that's true as often as this has been true should give people pause, and you should be doing some serious thinking. That's why I like to have a little bit of cash stored away occasionally. I don't like to see that in my club portfolios very much, but personally, I like to have a stash of cash, so that when these downturns occur, and they're going to occur, there's just no doubt about it. Expect them to occur. They're going to happen, and when they do happen, a lot of things that looked fetching, that I really would have liked to buy, but they weren't quite in the buy zone, suddenly become something that I can nibble at a little bit. It gives me the opportunity to put money into stocks that I already own, that I really like, that have gone back into the buy zone. It's just a great time. We're seeing this whipsaw going on in the market right now. Big loss, big loss, big gain, big loss, big gain. So it makes it a little bit more difficult to make decisions in a very patient way. But at the same time, when you make those decisions, you have the opportunity for returns that are a lot better than normal right now.
The bull's on the screen because we do a program called Bull Sessions. Ken and I do it every Tuesday at 2 o'clock Eastern time. And we will share nuggets like this all the time. And I really think this is one of those moments where you can really point to invest regularly as being sound investment advice. Here's another example of that. At Manifest Investing, we run a model portfolio. It's not real money, but what it is it's a simulation of the answer to the question, what if you started in 1995 and you invested the maximum you could into a 401k and selected stocks the same way that we always do? Find the up, straight, and parallels, what's looking good month to month. We publish this every month at Manifest Investing, and I think you can see fairly interesting trajectory. This portfolio is always 100% or within a percent of being fully invested at all times. And the thing that we really want to point out, this notion of investing regularly and remaining invested, because back in that black circled area that you can see there to the left, that was the financial crisis of 2008, 2009 that you're looking at right here. I want to remind the audience that that was the worst period in stock market history, going all the way back to the Great Depression. And you can barely even see it on there. I remember it was not an easy time. I'm not making light of it. You would go to the hair salon and nobody wanted to talk about stocks. They were talking about anything but, back in the late days of 2008, early days of 2009. But look at it on that chart.
Mark, I have a 24-year-old grandson that's really interested in investing. In fact, he's become a member of one of my investment clubs. And he sent me an article about 4 or 5 days ago that had the headline, "A Million Isn't Enough," which basically the article had to do with the fact that if you were aiming at $1 million by the time you retired in your nest egg, you weren't going to have enough money to live comfortably in retirement. And I think that this simulation, which has gone now for just under 30 years, this simulation shows that if you followed some of the things that are going on with your retirement and put reasonable amounts of money into your retirement funds in the way that the government allowed you to do that, you didn't have to settle for $1 million. You could settle for $4.5 million or maybe $5 million by the time retirement age hits you.
Well, I'm still holding out hope that you might adopt me and I can pick up a decimal place or two. All right.
Okay.
One of the questions that we get, and again, I'm not here to do a commercial for Manifest Investing. I just want to explain for with an elevator speech what it's all about. I have been had a front row seat for this for many years. I served on the Better Investing staff. I was in the Mutual Club of Detroit. I hung out with some of these gurus, and more importantly, I have worked with investment clubs and individual investors for nearly 3 decades now, witnessing successful investing. And what I really do think it comes down to, and I think Nicholson was right, so was Occam, keep it simple. Keep it simple. And the way that we look at keeping it simple, again, based on witnessing this type of successful investing all around the country, if not the world, is it really is important to pay attention to your stock selection guides, your stock studies, and the return forecast in section 5, the projected annual return, and this notion of quality for investments. And again, we have a fairly straightforward way of looking at quality and turning it into a metric. For more on that, go here. We're not going to cover it right now, but we basically rank every company from 0 to 100. But what it comes down to is you really want to pay attention to the factors that basically move your stock selection guide images around. And we really do believe that anybody can do this. Ken, any thoughts you'd like to add to this?
I think you've summarized that really well. I love the next slide, though, Mark, that talks about how some of the portfolios that we manage stack up against some of the more valued portfolios that are out there. That tin cup is the first bar on this graph right here, and it's doing pretty well at a accumulated return right there. You can see on the scale to the left how well it's doing. But I'd like to point to the round table, which is beating them all. And the round table, folks, is nothing more than a tracking portfolio. It's been around for more than 14 years now. The 4 people that run the round table in the beginning were Mark, myself, Cy Lynch, who's the current chair of the NAIC Better Investing Board of Directors, and Hugh McManus, who was a past president of the National Volunteer Association. And we decided 14 plus years ago that we were just going to pick some stocks and see how we did, and we'd keep track of them and we'd report that out to the nation. That, along with the fact that we believe in all of the above investing. So when we look at number 2 there, and we say we're putting an emphasis on discovering and owning small companies, we really mean it. We're taking a long, hard look at the kinds of companies that will help you achieve returns that are better than the market.
Yeah, and in fact, the slide you're looking at was from one of those bull sessions. It was from 20 questions submitted by an investment club that we took on and answered. And Ken's right. You can read more about what we're about to cover right here at this link on the lower left. But this is one of the things that we think we discovered early on about the stock selection guide. I am an absolute fervent advocate of the stock selection guide. But this is one area where I think it was a little bit vulnerable. And again, we do a Price is Right, door number 1, door on the left, door on the right. Which one would you like? Well, this one's up straight and parallel. Over here, this one's not. This one usually makes people giggle and guffaw a little bit. The bottom line is, as you read more into this, is the same company on the same day. And again, the difference between a company with a 30% projected return and a 7% projected return. Same company, same day. The difference is the one on the right factors in expectations from the institutional analysts. And again, I would encourage you to think about, what that might hold. If you go to this article here, you can read up more about it. It's just an invitation to think a little bit differently And this has kept us out of trouble more than a few times, and got us out ahead of a curve. At least put something on a a yellow flag or a red flag watch list, maybe a little bit quicker. Okay, stand on the desk and look around. Here is the other thing that we believe deep in our hearts. As Ken already mentioned, we want to buy those medium-sized and small company. Also, we believe in all of the above investing. This is a quick look at the S&P 500 versus the companies in value line that are not in the S&P 500. Basically, the red line is telling you that historically, performance can be bolstered by prudently pursuing the medium and small companies. So just a quick reminder.
And just in case you're thinking that Mark is saying ignore the larger companies in the S&P 500, we don't believe that for a moment. We believe that all size companies have a place in a good, well put together portfolio. We just are pointing out that so many clubs that we visit, so many clubs that we see in our travels around our state and around the country, so many clubs have focused so much on larger companies that they've moved their par values for the entire portfolio down to numbers around 8, 9, 10, and that's nowhere close to the 15% that Nicholson suggested might be a suitable goal for an investment club. We've rewritten Nicholson's goal just a little bit, and we feel that if he were around today with the tools that were available today, his goal would not be just the flat 15. His goal would be try to beat the market by at least 5 points, because we know that the market average over long periods of time, maybe as much as 100 years, is around 10%. So 10 plus 5 more gives you that 15 that he used back in 41. And today we think that if you can beat the market by 5 or better on a consistent basis, then you're doing really quite well. In fact, Mark and I are firmly believers that if you can beat the market by only 1 or 2%, you're doing much, much better than the average mutual fund can ever possibly hope to do.
Absolutely. And the Halloween trick-or-treaters is just there as a reminder that near the end of each year, we go hunting for small company stocks. Here are our results over the years. We actually had an 8-year winning streak come to a screeching halt a couple years ago. But the important point here, first of all, Ken, I know you don't like to talk about it, but we're doing pretty good this year.
No, that's enough said now, Mark. Keep going, okay?
So the long-term track record is 15.2 versus 11. That's a 4 percentage point advantage. That is not insignificant. And we do it in full display with the help of many people around the country, nominating companies and bringing some really cool stuff to our attention. So Ken doesn't let me talk about this because he thinks it jinxes us, but.
Well, I developed that thought in 2022 and 2023, so.
All right, here's a look at that roundtable performance that we've been talking about. Again, this is 4 or 5 friends coming together on a monthly basis for a webcast where we share an idea and walk through the analysis of that idea. It's open to the public. You can find registration information on the Mid-Michigan webpage or at Manifest Investing. But we are tracking along at about a 17% rate of return since inception. And we are trying to beat the market by that 5% that Ken was just talking about. And one last comment, this is the return on the average. It's a relative return, and Ken will explain that. The relative return on the average commercial mutual fund or exchange traded fund is minus 3.4%. Keep that number in mind.
That idea of relative return might be new to some of you, but we like to measure our portfolios by how much they're beating the market, and we like to use a pretty broad index to measure the market as such. We use the Wilshire 5000, which is 5,000 stocks, United States stocks, and we get a pretty good number from those 5,000 stocks that we can then compare our tracking portfolio to. You can see that it took us about 7 years to get that portfolio up to that beat the market by 5 goal. You can see that by about our 3rd year, I'm reading the the scale off that green line in the middle there. By about our third year, we were beating the market pretty consistently. And somewhere around our 7.5, 8th year, we actually hit that +5 number. And we stayed fairly consistently above that +5 number now. And we're moving into our 15th, we just finished 14 years a month ago. So we're now in our 15th year. This concept of performance accuracy, we've been doing a lot of work with the help of one of our friends from Houston, Matt Spielman, and we've been looking at accuracy goals for successful behavior. And we've been finding out amazingly that accuracy goals around 55%, that means you're wrong 45% of the time, but accuracy goals of about 55% can make you into a champion. If you're interested in that, come to our next bull session where Matt's going to do a really interesting, tremendous presentation on this very idea. Our performance accuracy right now is just over 47%, and we'd like to move that up to somewhere closer to that 55 number. We're working real hard to do it, and it's budging, but it's moving very, very slowly in the right direction.
Yeah, most of the Knights of the Round Table are in the 50 to 55% range. Ken, we just need to get Ann Manning to pick more stocks as a guest damsel.
Ann's with us tonight, so a shout out to Ann Manning
excellent.
in the audience.
Well, there, I didn't even know that.
Ann is one heck of a stock picker, and we're so glad to have her with us occasionally. When she makes a stock pick, we all listen. This is mind-boggling, folks. We have made about 256 selections over the term of our experiment.
825.
I'm sorry. We have made 825 selections over the term of our experiment now over the 14 plus years with a rate of return about 17%. The 256 refers to the number of selections that are currently worth less than the $1,000 we put in every time we put a selection into the tracking portfolio. Now, we have one company at the top of our list. It's our largest holding. We've chosen it 4 times. So we put $5,000. That's all we've put in to Microsoft. And currently it's worth $96,000 plus. And you know, that $96,000 covers the entire loss for the rest of the tracking portfolio and still gives us a gain of about $15,000. The cumulative loss for the 256 positions is almost $81,000. So Microsoft alone wipes out that loss. You don't need a lot of home runs in your portfolio to be successful. And you have to remind yourself that a loss is always limited to how much money you put in, while a gain has theoretically absolutely no limit. It doesn't have to just double or triple or quintuple. I have stocks, folks, that I've held for 30 plus years that have moved up to the 50 and 60 and 70 times what the initial investment was in that stock. It can happen with holding stocks for as long as it makes sense to do so.
Yeah, and I think we can give a little bit of gratitude and a nod in the direction of Carol, who retired from Microsoft, here in the audience or here in the back room. And that every time I see this chart, the one thing that comes across to me, and that's why I put the words there, what are we afraid of? You know, because you can do the math. We have 600 other positions that have gained. I mean, you know, don't lose sleep over one that doesn't work out. And what are we afraid of when you got this kind of stuff helping you out at the end of the day? So use this slide with somebody that needs to have the fear placed in an appropriate. We have to respect, but keep it appropriate. So let's go ahead.
It's a
Ken.
wonderful way to put it, Mark. There should be a lot of respect when you invest, but fear maybe doesn't belong in an investor's vocabulary.
Yep. All right, here's a slide that we love to put up. It's our performance perspectives slide. The company names that you see on here are the top 10 companies most widely followed by subscribers at Manifest. They're going to match the better investing community also pretty well. Many of them are part of the Magnificent Seven. And you can see some of the other portfolios that we've already talked about, the investing roundtable on here. Here's what we're trying to beat. These are part of many of our community portfolios. I own 5 of those 7. I think, Ken, do you own them all?
1, 2, 3, 4, 5. The top 6 I own, Mark.
Wow. And these are no strangers to our portfolios, and they can be most rewarding. You can see some fairly long time frames. And there are the returns. Here's that relative return concept that Ken just shared with you. That's how these are ranked. And you can see the roundtable in there. And then it is okay for some people to invest in index funds. We call this Indexville down here at the bottom. It's okay. There's nothing wrong with these returns for those that don't want to be lunatics like us in this community. But it is possible to reach for the numbers up at the top. Now, 3 investment clubs that are here tonight actually submitted their portfolios. I just stuck numbers on them. And you can see the club number 3 is above that 5 percentage point threshold, according to their club accounting performance report. And so is number 2. And then there is one club here that I guess reading between the lines, they probably had weaker performance for an extended period dating back to 1988. Probably okay, but a little bit weaker. You can see that they've actually been quite strong over the last 7 or 8 years. So I suspect that things are getting better and better there. So from top to bottom, I think this is just a dramatic illustration of what is possible when you keep an open mind and go out there hunting for the next company that's going to be on that list. And many of those are not the most household names. Anything else on here, Ken?
No, I like this slide a lot. You know that, Mark. Let's look at some of these portfolios that people have sent us. Our thanks to Grant's Partners, and you took it off before I could read the rest of them, Mark.
Sorry.
High Heeled, is that the way you pronounce that? And Meta, M-E-D-A, not to be confused with the stock Meta. This is Meta, M-E-D-A, okay, or Meta, all right?
And I just switched to the numbering system to keep them kind of anonymous, but we want to look at how these companies break down, or how these clubs actually break down. And these are some of the important characteristics for any portfolio. And we're going to actually zoom in on, most importantly, the average growth of the portfolio, the quality of the portfolio, which never seems to be a problem for clubs in this community, and the average projected return. So the return forecast for the portfolio.
The first thing that I do when I know that I'm going to be visiting a club is I ask for a listing of the stocks they hold and how many shares of each. Just a simple listing is all I want. And I put them into a Manifest dashboard, and that dashboard gives me some of the prime numbers that tell me what they can begin to do to make things go better. Well, you're jumping around, but if you go back one slide, Mark. This slide comes from your software that does your accounting. And this slide tells you a little bit of stuff about your portfolio, but if you're trying to gauge how well your portfolio is doing based on this slide, it's very, very difficult to do. Even if you look at capital gains over there in the second last column, you get a sense that Microsoft has a lot of capital gains depending, compared to a couple of the other companies in there, but you're not getting an answer to the first question that I ask when I visit a club, and the question is asked in kind of an offhand way, and it's, how are you doing? And I don't mean, how do you feel today? I mean, how's your portfolio doing, and how do you know how it's really doing. And then we go to a manifest investing dashboard, which is the next slide, the one that Mark had up. And we can start to look at really important numbers. I focus always, the first thing I focus on before anything else is that column headed growth. And we could put the word sales in front of it because it indeed is sales growth. And we know that really successful mutual funds that come close to that beating the market by 5 percentage points numbers, we know that their growth in sales has to be up in the 13, 14, 15% usually for that kind of performance to happen. So when the sales growth for a club is down beneath 10%, Arizona number 2, it's not a criticism, it's a fact. Okay, the sales growth for your companies based on data coming from Y charts, that's a data provider that Manifest Investing uses, but based on data coming from Y charts, we know that if you really want that par number over in the last column, the potential return, if you want that to move up into the low to mid-teens, then you have to push your sales growth up. For us, the way you do that is you carefully look at the large companies, the slower growing companies in your portfolio, and you carefully, and I always use the word slowly and methodically, you carefully, slowly, and methodically begin to add medium-sized and smaller companies, which will spike the growth towards a higher number. And to do that and not end up with 50 stocks in your portfolio, you sometimes have to pare back some of your slower growers. I think that's what we'll talk about as we look at the actual portfolios themselves.
Yeah. So here's that first one. My dashboard's for Arizona 1. A great looking portfolio. The quality is strong. This is actually above average for most clubs that we visit. Could still be a little bit higher. Ken and I have been pushing that number higher and higher, and the return forecast is around 10%. It could stand to be a little bit higher, and something to think about. Now, the 25% in Microsoft, we often get the question, how much is too much? Thought I'd take a moment and just describe how we think of that. Please, please, please recognize this as a guideline. You do not have to take action on this immediately. Do not go back to your club meeting and say, Mark said to sell Microsoft. That's not what Mark said. If you take the percent of total assets, 100%, divide by the number of stocks in the portfolio, you'll get an average position size. And we just simply think that as a decent target range, the limits should be twice the average position size, or 18. The minimum, half of an average position size, 4.5. And again, that's what you want to work to over time. And again, the number of stocks in the portfolio are going to influence that greatly. If this number were 20, you can do the math. Okay, so I wouldn't panic on that. The one point that we do encourage clubs, if you do not have a familiarity with this type of a concept, we do think that looking at the relative strength index, the RSI, for exit opportunities or trimming opportunities. And again, I'm not going to go too deep into it other than to say anytime this gets up here above 70, it's potentially attractive to consider it as a trimming opportunity where trimming is needed. For more on the subject, you can go down here and grab this. This is a free site. You can actually learn more about the relative strength index. We do use this as a topic. We are not obsessed with it. But if you have something that is eligible for trimming or even exiting, you might want to think about this concept. All right. So here's the worksheet for the portfolio. I basically ranked it, clicked on the par, so it's ranked from highest to lowest. So the companies to be considered for accumulation are up here at the top. The ones that are potentially selling situations are down towards the bottom. And this is our opportunity to point out that anytime you have a decent near market return with a double-digit growth rate, Nicholson said, and Ken loves it when I point this out, be slow, be reluctant to unload anything that has a double-digit growth rate. Give it room to run, even though the return forecast may dip into low single digits. And just something to think about. So this is a
Well,
great.
and that's quite a stellar list of double-digit growth rate companies that they have, Mark. Starting with Taiwan Semi, Microsoft, GE, Mastercard, and Arista. A little bit tech-heavy, but still a stunning list. Like I said, my eyes go immediately, first of all, to the lowest growth stocks. I'm always concerned because I know that everything on a stock selection guide starts with sales. Earnings follow sales, and stock price then follows earnings. And over time, if Alpha Metallurgical Resources doesn't start to grow more robustly, then eventually its earnings are going to follow that same growth pattern, and then its stock price will follow that same growth pattern as well. It seems to have a really hefty par right now, but I would ask myself, and you can evaluate it better than Mark and I can, but I'm looking at the sales line and I'm asking myself if Alpha Metallurgical Resources is a growth company. I'm looking at a sales line that from 2022 through the analyst consensus in 2026 is headed kind of downward. And I'm looking at an earnings line that's kind of flat, that's not very exciting. You are the final ones that have to make the decision. I'm just pointing out what I see on these graphs. That's all.
I'm kind of fascinated by this one. First of all, it's going to be bumpy. It's they provide metallurgical coal to people who make steel stuff. And in fact, this one, I was actually looking at all the coal companies back in this time frame. I could just never muster the courage to go into them. That price bar dipped way down there. This is an interesting company. You're basically investing in a coal company which is directly involved in the output of a bunch of green technologies. And they sell about a third of their business is exporting to India. So there is a growth rate. And then I just wanted to demonstrate one real quick thing to check on. This is a question mark. You know, that red line is a trend line through some bumpy data. I went to ChatGPT, which if you haven't done this yet, you might want to tinker with ChatGPT. There's a free version of it. I just asked this question and I got this answer along with pointing to the India stuff. So just an interesting sidebar. The topic has always fascinated me because I think the metallurgical coal has decent expectations. The coal that makes electrical power, not so much. So it can be a very confusing. This could be an area of opportunity. That's up to the club. Okay.
Mark, we just came back 3 or 4 weeks ago from a visit to Sault Ste. Marie. Sault Ste. Marie is at the extreme northern border of the U.S. and the very top of Michigan, and it's directly across the St. Mary's River from Sault Ste. Marie, Ontario, where the largest steel plant in the Western Hemisphere is located. And I never realized how much coal was being used to produce steel until I saw these gigantic piles. We took a boat trip through the locks, and I saw these gigantic piles of coke. And coke is nothing more than a refined kind of coal that they've processed in order to mix with the steel, because without coke, steel is just plain old iron.
Absolutely. Then the other thing that I found kind of interesting is that a lot of coal is used in the manufacture of semiconductor chips. Might be worth digging into a little bit. Here's the second portfolio. Boy, this one has some real superstars in it, Ken. Very senior portfolio. A lot of community favorites in here. I would just simply call it magnificent. You can see their returns over 20 some years at 13 and a half. Wow. Here's the dashboard.
Yeah, if I were sitting down with the club, I would suggest that some of the companies in the portfolio that used to be double-digit growers are no longer double-digit growers, and you have to be really careful when you end up with a number of really large companies that are no longer growing as quickly as you expect them to, because when the growth starts to slow, and the teacher in me comes out, and I got to repeat something so many times for you to remember it. When the growth starts to slow, then the par value eventually follows that growth. I know what everybody thinks about Apple. You love the stock, you love the products, you love everything about it. But when the growth starts to slow, the par value eventually follows. It doesn't necessarily immediately connect to the quality of the company, although over time, eventually the quality will lag as well as the profitability becomes less favorable compared to the industry. But as the growth starts to slow, keep it simple, the par follows. And if you end up with slower growth, eventually you end up with pars that are not going to reach the kind of numbers that are going to keep this portfolio at 13 or 14 or 15% growth.
Mm-hmm. The other thing to point out is Berkshire Hathaway is about 40 or almost, it was 50% Apple. So you basically had a little bit of kicker to make that number even bigger. So just something to think about. Buffett sold, I don't know what the number was, $30 billion worth of Apple last weekend, the last quarter, reported it last weekend. So that's there. The other thing, go ahead, Ken.
I want to make one more point. I love your double-digit growers. You got some great ones in here, and I'm especially focused on Yeti and Lululemon. First of all, I will announce that I own both of them. One of them in a club portfolio, and one of them in my wife's IRA. And they're double-digit growers. I love that, and they only represent less than 1% of this portfolio, each one of them. Even if they quintuple in value in the next year or two or three, are they going to have that much influence on this portfolio? I'm just asking questions because they look like the kinds of stocks that you might want to put some more money into as you do a little bit of judicious pruning. You didn't hear Mark say sell any of these. You didn't hear Ken say sell any of these. We're not saying sell all your Apple, but some judicious pruning of Apple might be worth the effort.
Okay, I lost my screen here a little bit for a second. All right, so in fact, I'm
looking at the workshop of Arizona 2, Mark. Is that what you're looking at?
Sorry. So here's the worksheet. I did want to point out that you guys inspired me. By the way, that RSI situation on trimming Apple might come into play. You might want to take a look at that chart. Then I also did an audit of U.S. lime and minerals, and run into this from time to time. The analysts were kind of all over the map on this one, so I had to do some cleanup. This will actually make that portfolio look a little bit better. Those changes were made and are incorporated here. And so, yeah, I'm basically seeing a portfolio with decent growth, could be higher. We want more par, and basically wanted to experiment with the possibility of, trimming some Apple, maybe even shuffling off Berkshire Hathaway as a what if. This is the worksheet function at Manifest, and you can basically play with it to raise, do the transactions which will raise the growth rate and the par as a result of switching stuff out. Added a little bit of this NAIC company to the portfolio, and then I think I stuck in a couple others. We accumulated some more Lulu, just like Ken was drooling over a minute ago, and Yeti. So you can basically see that with a relatively few number of transactions, this number is, again, this is a what if. If you made those transactions, growth rate improves, par improves, and just something to think about as a club.
Well, And with that redo of U.S. Lyman Minerals, that might be opportune for some stashing a little bit of cash into as well, Mark. You know.
Absolutely. So let's switch to the third portfolio. This one's also fairly traditional. A lot of community favorites, a little more industrial, but still a pretty good portfolio. The one difference was that this one had a little bit more cash. Here's a look at that on the portfolio. O'Reilly is a personal favorite. It was part of the Mutual Club of Detroit. All three of these clubs had Apple. Nova is a recent best small company for this year, and it's a recent roundtable selection. So it's a company that we follow fairly closely. But again, pretty decent portfolio. Again, this growth rate is good and can be better. You want to do and make the decisions that will actually bolster that a little bit. At the same time, you want to raise that projected return just a tiny bit. Here's the worksheet. Oh, I wanted to take a moment with O'Reilly. Great company. You're basically looking at a 30-year stock selection guide there with the sales up at the top, stock price down the middle, earnings at the bottom. What a nice portfolio.
O'Reilly set a record in one of my clubs, Mark. We held it on a pounce list for almost 2 years, knowing that we wanted to get into it, but being patient enough to wait until it got into the buy zone. And boy, are we happy that we've held it now. We've probably held it for 13, 14 years now, and it's been quite a performer.
This one's a pretty cool company. I don't know why the financial strength is a little bit lower. Perhaps the fact that they've got 16 billion in liabilities and virtually an empty wallet might be part of that. But I look down here to this effective interest rate that basically tells you what the banks think of them as a credit risk, and they like them. So here is the portfolio worksheet. And again, you can do some what ifs here also. And basically say, what if we replace company A with company B and that sort of thing, and make some pretty good progress. I went out and looked for companies that might be worthy of consideration. Just wanted to point out that I think it's prudent to sometimes shop near 52-week lows, especially when that CNBC markets in turmoil graphic shows up. This is not a bad one to pull out. And again, I went searching for exceptionally high quality companies with double-digit growth rates, decent earnings per share stability so that the lines will be up straight and parallel, hopefully, and again, within less than 20% of their 52-week low. There's a number of companies on here that are worthy of attention. There's management turmoil at the first one you want to become familiar with as you study that, but we recently added Schlumberger, and Ken's already mentioned Lulu. Here's NICE, which has come up in a number of discussions. There's some interesting companies on here to study.
We've just added Viva to our Buttonwood portfolio too, Mark.
Yep. So using those as candidates and throwing them into the portfolio, playing the old what if game, you can see that the growth rate can be, well, I just put them in to show that they show up at the top of the screen for shopping purposes as having attractive return forecasts. And there's what it looks like after you inject those companies up at the top. You can see that the growth is now pushed up to 11, and the par is now making progress in the right direction. And as Ken said earlier, be methodical. You don't have to panic and do these in everything
please don't try to do these in a single meeting. No, take 4 or 5 or 6 months to adjust portfolios when they're way out of whack. But slowly and methodically, we'll win the race.
And notice, Ken, I put your Louis Vuitton in there as one of the companies also.
I really like that company. Be aware, folks, you cannot buy this one on the regular exchanges. This will cost you an analyst. The broker will ask you to pay a fee to buy this one because it's not listed anywhere in the U.S. You have to buy it from a foreign exchange. But with that all being said, extremely high quality company with a great par, great potential return attached to it.
So anyhow, that's the moral of the story is to keep doing what you're doing. I mean, those 3 results are fine. Use your community. to access opportunities. We certainly present them at the roundtables. Ken presents them at the stock ups and the various programs put on by Better Investing. And I'm pretty sure that Arizona has a couple of model investment clubs also that are, if you're out there looking for a club, great place to meet some people and share some ideas. And can't say enough about the type of work that people like the Arizona Volunteers do.
We have a great question from Tim out in the audience here.
Mhm.
He says he has some problems with ORLY, O'Reilly. The return on equity and the debt numbers are strange. How do you use the BI numbers to evaluate the SSG results? Tim, I'm going to direct you to a ticker talk that was done just last Thursday. It'll be on the Better Investing website. Our comptroller for Better Investing, Cliff Trent, did a section on return on equity and debt, and he talked about how they're related and how some very high-ranked blue chip companies are showing some very strange ROE and debt numbers. The conclusion that was drawn from the whole presentation, and I would like you to look at the presentation, was twofold. First, a lot of these strange numbers are the result of many years of cheap money. Money that you could borrow at less than 2% or less than 1%. And Cliff makes the case for that, first of all. And then second of all, he suggests that if you really want to take the time and find out how these things are all related, then you can do that and you can invest in many of these high quality companies with these strange numbers. If you don't want to take the time, then he would suggest you might want to stay away from some of these high quality companies until they get their debt back under control again. What's happening is that the debt, the numbers suddenly went out of whack when the Federal Reserve chose to raise interest rates extremely quickly over a very short period of time, and we went from free money to not so free money. So I would refer you to that ticker talk, listen to that presentation, and then make a decision for yourself whether you're committed to taking the time to understand the situation and whether the company is committed to getting the debt numbers back under control again.
Yeah, and a lot of times it's just a matter of the capital structure decisions that have been made. Sometimes they can be very prudent, but as Ken has pointed out, they can also be pretty transient and challenging. And I think that's part of what you're seeing here with the lower financial strength. That's just a flag or a nudge to study more carefully. I suspect that the return on equity on this company is NMF. I do not know that for a fact.
Well, they have to report a return on equity calculation to the SEC, Mark, and some of these ROEs are coming out negative and some of these debt numbers are coming out negative, and that is interpreted by accountants in a kind of an odd way. Again, I would refer you to Cliff's presentation.
Mm-hmm.
It was done on last Thursday's Ticker Talk. He knows his stuff, and he put it in pretty simple terms so that people can understand it and at least get enough of a leg up to begin to do some of their own research on it then.
And by the way, the stuff that Ken just described on a macro level is what went wrong over the last 5 days. The borrowing of money at basically zero interest rates in Japan changed overnight and disrupted a whole bunch of people, probably none of us, but disrupted a bunch of people on Wall Street. So with that, we are at our 1 hour point. We can take a few more questions, I think, but I suspect that the Arizona staff is ready to reassume control and move on unless they have something else they would like us to touch on. So Steve, is it back to you?
All right. Well, thank you very much, Mark and Ken. I really, really enjoyed hearing your presentation. It didn't seem like an hour to me, but I sure appreciate your insight and your work that you have done over the many, many years to really make investing make sense for us. And as you have said, anybody can do this. It just takes a little bit of effort, and with some proper education and instruction, good things can happen. That's for sure with our individual investments and our club investments. So thank you again, Mark and Ken. If there are any
You're most welcome.
questions, thank you. And if there are any questions, make sure you ask them. Also, remember this: the handouts have the slide deck that we're using for our presentation, and Ken and Mark's presentation is also available for you. All right, let's move on. We covered the questions, and oh no, it's time for another prize. Robin, Diane,
Yay!
take it away.
The next
Muted.
prize we are giving away is one of the books that Better Investing publishes, although most of them are digital now. They consist of the Stock Selection Guide, the Investment Club Operations, the Mutual Fund book, and Using Portfolio Management Wisdom. Diane, you want to pick the winner?
And the winner is Timothy McDonald.
Oh, congratulations, Timothy.
Okay. And the next one is a 1-year subscription to Manifest Investing.
That one is, this is wonderful. This actually, it goes to Jack Ranby. I consider this to be the grand prize.
Congratulations, Jack. And well done. Thank you. Thank you, ladies. Anything else?
Continue on.
I guess we'll just have to hold our breath and wait for another prize drawing. All right. Let's move along here. Okay, as far as the Arizona chapter is concerned, this is what we have done. These are our chapter activities for the last, we'll say, fiscal year. We went to Bink and won a door prize. We sponsored Cindy Irby, who's one of our volunteers and hope to be our director tonight. And she was there, and we won a door prize. Door prizes are everywhere. And there's our Metro Mini unit that we won. So thank you, Better Investing. And so moving on, we sponsored 4 open forum events. This is kind of what we call our educational, is a general term for our educational events. As you can see, I did a first cut on Gentex and analysis of NVIDIA. Hey, is NVIDIA for real? I mean, this was pretty wild. I did this, and I could have gone down in flames, but it worked out real well. You know, what is AI and how does it apply to all this NVIDIA and AMD and whatever else is going on? Talked about using SSG and making good judgments. We have another open forum educational event next month. We did 2 club visits virtually and 2 in person. PAMIC, that's the Phoenix Area Model Investment Club, met 9 times online, once in person. And so Southern Arizona Model Investment Club met 10 times, once in person. And our board met on the 2nd Thursday of each month, and one was held in person. All right, so let's continue on. Did you know the Arizona BI membership? We have hundreds of members in Arizona. Thank you all that are attending tonight. Thank you, thank you, thank you, and try and spread the word. We have over 50 BI clubs in Arizona. We would love to help you. We have been helping one new club that has just been getting started, both with email and virtual meetings as well as in person. So we are committed to helping you folks do better. And they have asked a lot of good questions, and hopefully we've given them all good information. We have some lifetime members. These are folks that have contributed a significant amount to become lifetime members. We have a lot of individual members. Some aren't even in clubs, but we welcome them as well and ask if they have any questions or would like to contact us, we're available. Look at this, 20% have been involved in BI for over 25 years, including 3 of the board members have been serving the chapters since the 90s. Thank you, thank you, thank you. That shows some real commitment and stability, and we'd like to mentor some new folks to become volunteers and hopefully directors as well. And you can have an effect and have an impact and input into better investing in Arizona. Here are some upcoming events, as it says. Phoenix Area Model Investment Club, 6:30, starts on September. We take the summer off, which means July and August. We try and hibernate and stay away from the sun. But by September, things are cooling off, so we'll meet again every first Thursday of the month. Southern Arizona, they're not afraid of the sun. They just keep meeting anyhow. Fourth Tuesday. Both those club meetings, notice, start at 6:30 p.m. Mountain Standard Time. And our upcoming event in September, our open forum, will be What is Financial Help? This is a seminar I have done several times in the past. I'm always updating it, and it should be better than ever. September 15th at 7 p.m. It will be virtual, so you can all log on. Next board meeting is the second Thursday of the month, so that would be coming up in September, a month from today or so. Okay. And oh no, we've got another door prize.
One more time.
Okay, go ahead. Go ahead.
Okay.
Go ahead, Robin.
Our next giveaway is a 1-year subscription to StockCentral.com, which comes from iClub Central. It brings together multiple tools to investors to discuss, find, and analyze suitable companies for their portfolios, including comprehensive tools for researching dividend stocks. And the winner is
Our own Nitra Pope. Yep.
Congratulations, Nitra.
Yeah.
She has attended so many of our presentations, and it would be just, I'm glad to hear her name again. And she's in Florida. That's just wonderful. So she's up late with the rest of the Easterners. Thank you, Nitra.
And the next one is a 1-year free BI membership with the SSG Plus. And that winner is?
That is, hold on one second. Let me pull it up real quick. I'm sorry, I had to pull it out of there and I dropped it back in. Hold on one second.
No
Gretchen
cheating, no cheating, Diane. No cheating.
No, yeah, Gretchen Linda off is our winner.
Say that again.
Gretchen, Lindelof.
Very good. Congratulations, Gretchen.
Yes, there we go. Good.
All right. I guess we can move along then.
Yes.
Okay, we're going to get to right now our board members. You can see we have 5 directors listed and 3 volunteers. And Chris up at the top, Chris Persick Cox, is her term is expiring tonight, basically. And she will be up for election for another 3 years. You can see our other directors. We have the other 4 directors listed. We all have 3-year terms. They are listed as when they're going to end. So next year we vote on Robin to see if she will continue with us, and we hope she will. And so on the volunteers that we never want to forget, Diane and Schaefer, who's handing out prizes tonight. Can't forget Diane. Daryl Jones, who's involved with the Southern Arizona Model Investment Club, and Cindy Irby is up for election tonight. She is our current treasurer, so we want to make her a director. So the election slate for tonight is pretty simple. Chris Persick Cox is up for another 3 years. Cindy Irby is going to move from a volunteer to a director, and we have our 2 other volunteers that we vote on every year. All volunteers are sort of voted and just acknowledged every year. So with that said, we'd like to have a voting slide come up, and we can, and all the BI members, and go ahead and vote. And poll must be closed to enable screen. Okay.
So I've launched the poll, and yes, so basically only the Arizona chapter members may technically vote, but I did have an option at the bottom there for you to say, hey, I'm not an Arizona chapter member. So,
okay.
Helpful if you aren't an Arizona chapter member, just go ahead and click that so we kind of get a sense of trying to get as many folks to vote as possible. We're at about 56%. Thank you. I see that I'm not an Arizona member going up, so that's okay. So we'll give it just a few more seconds.
I can't vote. This is Diane.
Yeah, you're in the back room, so unfortunately back room can't vote.
Okay.
Neither can Steve as the presenter. So, okay, we're at 60%. I think that's pretty good. We'll go ahead and close the poll, and I'll quickly share that basically you can say it was unanimous that everybody that wasn't a Arizona chap that said, no, I'm not an Arizona member, said, yes, I approve. So congratulations to Cindy and Chris for being voted in as directors, and to the 2 volunteers for renewing. Thank you.
Yes, thank you so much. I mean, a lot of the all the volunteers and directors mean so much to the chapter. Robin is vice president. We haven't talked about Frank Lyons, who is the secretary as well as the web author. Robin, by the way, does all the Innerspires and other wonderful email communications, as well as just helps out in any way she can. Thank you, Robin. Thank you again, Frank, for your efforts. The minutes and what you see on the Arizona chapter's website is thanks to Frank's continuing efforts. And Cindy has done a stellar job as our treasurer, and we certainly welcome her to be a director with the rest of us. And thank you to Daryl and Diane for continuing to support the chapter in any way I know you can. You've been such good support and helped out to really get the word out on better investing. Is this the last one?
Nope.
Oh, we have another giveaway?
2 more.
Okay, this is the next to last one, so I guess this is it. This is it's showtime again. Robin and Diane, take it away.
Oops, I'm speaking, but I'm muted. Can't you hear me? We have one more of the books that Better Investing has to offer. Diane, you want to say who that goes to?
That is going to go to Raymond Patterson.
Raymond, congratulations. All right, thank you, Raymond. And you'll email Raymond, is that correct, Robin?
Yes, I have certificates, and I'll fill them in and shoot them to him tomorrow.
And we have another giveaway.
We do. And Diane, how many books have we given away? I have lost track. Is that 3?
No. Nona, Timothy, yes, and Raymond got the 3rd book. I think.
Oh, okay.
Were you looking at an iClub membership?
No.
Okay, you had another giveaway.
One more giveaway. Hang on just a second.
Sounds like you're buried in prizes there, Robin.
Well, you know what? All you have to do is ask, and people respond.
Very good. You've done a stellar job. Thank you for asking.
Okay, and the next one is one more BI membership with the SSG.
I think I pulled out Kathy Myers.
Correct.
Okay, correct.
Very good. Hi, Kathy. And we have one more of these coming up.
All right.
Yeah.
Well, thanks for the warning. We'll try and be ready. All right, moving along here. As we've said, we have 2 model clubs, and after watching Mark and Ken's presentation, here are the portfolios for the Phoenix Area Model Investment Club. And we just show that to you. I can tell you that our overall percentage return over at least the last 5 years, I know, is right around 12%. It's not 15%, so we can do a little bit better, and we will have a meeting coming up in September where we will try and improve our performance based on what Mark and Ken have taught us tonight. So, but you can sort of see where we have. And one thing I should mention here is, you see there are 3 stocks that are losses, that are unrealized loss. Well, we haven't sold the stock, so we haven't really lost any money. But by the way, I am also a member of the PAMIC, Model Investment Club. Anyhow, but these are also the 3 smallest parts of our portfolio, percentage-wise. So, hey, you know, if you're going to have a loser, might as well make it a small percentage of your total. So I thought that was kind of interesting. In Southern Arizona, here's Southern Arizona, and let's see what their portfolio looks like. Do you want to say anything about this, Robin?
I see Daryl's online.
Oh, Daryl.
Why don't you introduce yourself?
Yeah. Welcome, Daryl. What would you like to share about the Southern Arizona Model Investment Club?
Daryl was having audio issues early on. I did unmute you, Daryl, but you have to unmute yourself too.
Okay. Try it again, Daryl. And if we can't get Daryl.
Well, anyway, I will. We have been in existence since, oh, is he back?
No, go ahead.
Oh, we've been in existence since about 2005, and we've had some members come and go, and we have done, some years we have done very well over what the market has done. Other years that hasn't been the case, but we're fun. We like to have fun. We like to enjoy, and we're really trying to focus very hard on doing at least a 15-20 minute education segment. So,
and we're for new members.
Yes, that's right.
And yeah, I should point out that both the model clubs, Phoenix Area Model Club and Southern Arizona, are open for new members. So if you're interested in joining us, come on by, visit our next meeting, and after a couple visits, you can see about joining us. We would love that. We're open for new members. That's for sure. Anything else about Southern Arizona?
I don't think so.
Well, thank you. Thank you for sharing, and keep the fires going in Southern Arizona. We need you. All right. Okay. I'd like to point out something, and I mentioned joining a club. Hey, there's a new feature with that Better Investing is now offering, and it's called Club Connect or Investment Club Connect. You can find an investment club, not just the model clubs, to invest in, and all you have to do is go down to Club Connect, and you can look for a club, or if anyone's out there and it has a club and you would like to have some new members, you can register your club with Club Connect, and then you also will get notices for new folks that are looking to join an investment club. And it might be that they fit with you. It's kind of like, investment club dating 101. And so Better Investing tries to put clubs and Better Investing members together if they're looking to join a club. Okay? So please check it out, as it says at the bottom. Okay, so how can we help you? Once again, we're going to ask, how can we better serve you as individual investors? Don't think that we're just concentrating on clubs. Hey, every BI member has access to the Arizona chapter, and we are perfectly willing to get together with you as well and help you with an investment and maybe do an SSG together. As well as, hey, you folks in clubs, if you need us to give you a 10-minute or a 20-minute presentation during your meeting, hey, let's talk about that and get together. Better Investing really encourages the chapters to visit their clubs, and I really, in response, invite the clubs that would like to have some special education or special topics discussed with the Arizona chapter at their meetings during an appropriate amount of time. Let us know. I should also mention, I belong to another club called Taking Stock Investment Club. And years ago, we had a club visit from the Arizona chapter that completely revitalized and refocused our club. And so I would really like to testify that really made a wonderful change. And our club has always done better since they visited. And we recall that, and we're using those principles today. Okay, becoming a volunteer is easy, okay? You can meet online with us, attend some board meetings, and we can, then you can become a volunteer. And after you've been a volunteer for at least a year, then you can see about becoming a director, an associate director, or a director. But we need volunteers. We need future leaders, as it says. Hey, we need new blood all the time. Younger folks are really encouraged to join us. Classes, events, as it says, teachers. If you're a teacher, have that, like Ken Kavula has a real strong background in education and being an instructor and teacher. And you can see why. He is a very good example of how to be a teacher, mentor for folks in BI with all his webinars and everything else. If you want to do club visits, hey, web author, we could always use some help. Web authoring, which is updating the chapter's website. And we'd like to do more with social media, whether it's Meetup, Facebook, Instagram. We would like to have some folks join us that can get us online in a more approachable and reachable social media type of environment. And as a benefit, not only do you get investment education, but you get free access to BI's online software tools. So if this makes sense to you, make sure you can use the contact at Arizona Better Investing, and we will also have a little bit of feedback for you after this meeting where you can express a desire to help us out. So with that said, we have one last giveaway. So Robin and Diane, take it away for your grand finale.
Actually, there's two. One is Stock Prospector, which is another iClub Central program. And I really like this one. Diane, the winner is
Paul Wilcox.
Paul Wilcox, Stock Prospector. Congratulations.
Congratulations.
And one more SSBI membership, SSG Plus.
Fantastic.
Onslow Carrington.
Oslo Carrington, congratulations.
Yeah, but that's it. Congratulations to all of our winners. These are all excellent gifts. Any one of them I would appreciate.
Yeah, you gave away some good prizes. Congratulations. You know, we haven't had prizes at these annual meetings before, and I think you guys are making up for lost time. Excellent work. Thank you both. Thank you, Robin. Thank you, Diane. And with that said, I'd like to thank each and every one of you for attending our annual meeting of the Arizona chapter. I should point out that after the webinar ends, you will be asked for some feedback, and please take a little bit of time and fill those questions out, and let's have some feedback, some good feedback. And we'd like to know how we can serve you better, what we need to change, anything else that needs to be said. We're listening. So with that said, thank you all. Robin, Diane, anybody else would like to say goodbye and thank you?
Thank you, everyone.
Come again.
All right. What a wonderful meeting. Thank you to Ken and Mark. Hope you all download the handouts and give us some feedback. And we thank you again for this evening, for being here this evening, and have a good night.
Good meeting, Steve.
Thank you. All right, I am done. Yay!